Hey, Suzanne Caldeira with Guaranteed Rate. I am excited today to get to spend some time with Lori Lincoln from Keller Williams Realty. She's someone that I've admired over the years who does business the right way, has built such a strong following, and has a real solid reputation. And we decided today to have just a quick conversation on the market, on a lot of questions that Lori and I are both getting from clients. But Lori, thanks so much for stopping by today and
Well, thank you,
doing this.
Suzanne. This will be good. I think I think that our friends and our whoever's watching, they need the education, particularly about mortgages. So I'm really looking forward to this.
Yeah, I agree. I agree. I'm excited about it. What have you been finding are some of the common questions that you're getting from your clients on, say, the listing side?
Well, the sellers are not, they don't want to move. They don't want to sell because they have this really low rate, which is not going to exist and not probably in our lifetime ever again. Even though they want to move, they can't move because their finances are, they're paying their mortgage with that low rate, and then looking at another house with a higher interest rate. It just doesn't make any financial sense to them. And I know that there are programs there, that you can explain.
Certainly. Yeah, I think from a seller's perspective, and the thing with life is that life is never static, right? If it was, then no one would move, no one would ever do anything, and the whole market would just stagnate. But and you've probably seen this in the cycle of your business.
Mhm.
People are going to get married, they're going to have kids, they're going to get divorced, people are going to die, and as a result of that, you almost have to think of what are the different options that I can do, and connect with somebody like you, connect with somebody like me. A good realtor and a good lender is going to advise them of what their options are.
Right.
The rate's only part of it.
People are putting off their dreams over a couple of $100s a month. Maybe that's a lot to some people, and maybe it isn't. Apologize if it's a lot and it's not due. But here's the thing. We only have one bite at the apple in this life. Not get Do what you want to do. That's really, it's like you gotta go and get what you want, do what you want, live the life that you choose. And they're putting it off because of a couple of hundred. It's like,
Yeah, I think it's kind of weighing those things, right? If you're in six, 800, $900,000 price range,
right,
you got to throw that out the window.
right.
Either you've got a budgeting issue, or you just got to get over that mental hurdle. Sometimes in the under 300 or under $400,000 price point, I get that, but there's ways that let's say you're in the $300 or $400 price point as far as what you're looking at and what you need to sell to get into a different type of residence. Then have that conversation with that mortgage person. Look at everything. Look at every dollar that you're spending. It's the boring work. It's the hard work. It's the work sometimes where you have to look in the mirror and say, like, hey, how many times am I on Amazon? Do I gotta peel this back a little bit? In
Hmm.
the higher price point, your risk tolerance might be bigger. Risk tolerance, for instance, to look at an adjustable rate mortgage, they're not terrible. They're sometimes used as a very strong vehicle for smart planning, as far as being able to get a lower interest rate, or mortgages that are what's known as an interest only mortgage.
Hmm.
Not the right product for everybody, but sometimes a product that may make sense for someone that needs to sell their house. Or you and Lori, you may have seen this. I've seen it so much on social media, the rent the rate, not the house. Or
Right,
you suck it up, you take a little bit of a higher interest rate, and the second that rates drop, you reach out to your lender, or I'm sure your
right.
lender will be reaching out to you to refinance. I think it's being short-sighted, especially with what's going on with the market right now, because I don't know if this continues to happen. Who knows? Maybe sellers are going to start seeing that peak number of what they could have gotten for their house was higher today versus if they waited a few
Oh.
months, or if they waited till next year.
I started in well, I can go back to when I bought my first house. I paid 11.75%. And when I started in real estate, 7 to 8% was normal. and we're at 6. And to me, that's, well, we're almost to normal, right? And I know, and this is I think we got spoiled over the last 12 years with these low rates, and it can't be like that forever,
I think we did. I definitely think we did. And, but I definitely think there's still opportunity for
Yes.
maybe the buyers that have put stuff on hold, that maybe there's going to be a little more inventory that's out there. New products are always going to be coming out. Mass Housing's got something really exciting for new first-time home buyers. That's an exciting product. So there's more that's out there that's available. And although we may see a correction, I don't feel like we're going to see this big crash, because the guidelines that mortgages were written under are the strictest guidelines in decades.
Mm-hmm.
So, back in 08, 09, when there was that crash, there was a lot of no documentation loans, a lot of loans where people said how much they made or pushed how much they made on paper that wasn't necessarily accurate. A lot of people that did a lot of zero down loans on investment properties. It wasn't their owner occupied. They're like, I'll let it go. Completely different market right now, where the underwriting standards are much, much higher now. So I don't foresee that we're going to have that. There's always the situational stuff. So you might have people that are in industries that maybe did not recover after the pandemic, or maybe weren't able to get their feet underneath them again and really work financially. However, big asterisk, those folks that are in trouble have equity. A lot of those people have equity.
So do you offer bridge loans? I mean, one of the challenges is also, sellers, maybe they need the equity from their home to buy the next home. And do you offer that type of service? And I know you offer quite a bit.
Yeah, currently we don't. I've got places that I can refer people out.
Oh, good.
But what I'll look at in a situation like that is a lot of times, if the equity is tied up in the house, Lori, sometimes people have other assets that they can use, and then they just replenish those assets when the house sells.
Oh, okay. Okay. Yeah. So could they borrow against their 401k or something and then just pay it back immediately when they sell, something like that? Or
Exactly. Yeah. 401k, if they've got a money market, if they've got gifts, if they, for instance, piece of art or a classic car that they were selling. So a lot of times when you look at someone's asset base, they don't necessarily need a bridge loan, but if not, I can refer them out. I've got some places that we refer to.
Right. Let's talk about first-time home buyers. So what constitutes a first-time home buyer?
That they have not owned a home in the past 3 years.
Isn't that something? Because I do have people that will say, well, I owned a home 5 years ago, so I'm not a first-time home buyer. I'm like, well, I think you could qualify as a first-time home buyer. So what are some of those programs looking like right now?
I'll tell you what, one of the ones that's really exciting is Mass Housing's, their Mass Dreams program. So for disproportionately affected areas, people can either get a $35,000, up to a $35,000, or up to a $50,000 grant. So I know one of the areas, for instance, is
a grant.
A grant, yeah.
Wow. Do they have to pay? So they don't have to pay it back?
Yes, it's a grant.
My goodness.
So there's provisions with it, but the nice thing is, so for instance, if they live in one of those towns, so I know New Bedford is one of the towns. I don't have the list up right now, Lori. They could buy anywhere in Massachusetts. So as long as they can prove residency, so we do have to prove that they've got residency in that particular town. If they're at 80% or less of area median income, then it's up to $50,000. If they're up to 135% of the area median income, it's up to $35,000. So yeah, and it's kind of an exciting little pat on the shoulder. We're one of Mass Housing's top lenders. We are what's known as direct. And speaking to you as a realtor, you might know that as speak. A consumer might not know that as speak. But what that means is, or realtor speak or industry speak, is that our underwriters make the decision and have certification to sign off on Mass Housing. They just have to give it a quick QC. And so it helps with speed. It helped one of my clients win a bid in Worcester. I called the listing agent and I said, hey, Suzanne, guaranteed rate. You might not have heard of me, but you might have heard of our company. We're the top lender in Massachusetts. We're one of the top mass housing places, and we can close this in 30 days. And the listing agent was like, really? I'm like, yep.
Wow. Wow.
Yeah, so it
That's
helped the buyer solidify her offer. And those are things that we'll do, that sometimes that little extra step that not all lenders will do, with calling the listing agent, sometimes begging, sometimes putting the client on a pedestal. Listen, we've done X, X, and X. Here's what we know is going to happen. And we can deliver within a certain timeline. It's still, interestingly, it's still a competitive market.
And I know you'll even talk to the seller too. You'll even take the opportunity to speak to the seller if
I've
they want.
offered that. Yep.
Yep.
Yep. Yeah. It's only been a few times where a seller's reached out, but I have
Yeah.
offered that.
That's amazing. Yeah, so I'm excited about that program for them. Now I did briefly read, because I know you sent me an email on it. I did briefly read there are a couple of towns near me, because obviously those pop out because of my particular activating system, right? It's like, yeah,
Sure. Yeah.
I know that town, Fall River and Taunton.
Yeah.
And I think Attleboro was on there, but I'll have to double check that. But I think those two, and those are pretty close to where I service.
Yes, Attleboro is so Attleboro, you're right, Lori. Attleboro is one of the towns, and I'll go through the whole list. You got Attleboro, Barnstable, Boston, Brockton, Chelsea, Chicopee, Everett, Fall River, Fitchburg, Framingham, Haverhill, Holyoke, Lawrence, Leominster, Lowell, Lynn, Malden, Methuen, New Bedford, Peabody, Pittsfield, Quincy, Randolph, Revere, Salem, Springfield, Taunton, Westfield, and Worcester.
Wow.
Those are a lot of towns.
Right. And the income limits are pretty generous, right?
Well, they are, yeah, because it's
one of
based off of
those.
the area median income, and
Yeah.
we're a high area when it comes to our area median income compared to other states.
Right, right. That's amazing. That's exciting though. $30,000 to $50,000 in grant money,
Correct.
free.
Up to.
Yes,
Yeah.
yes, it's up to, because they go by your income level or what have you. But that just is amazing, Suzanne. So, there was one more thing I think for buyers that is still a concern, and that's inventory. So inventory has been very low, and I'd love to see that happen. I mean, I think it has a lot to do with back in the day when builders kind of slowed down, and coupled with sellers holding on to that really low rate when they refinanced. So inventory can be a challenge. I will say though, I believe inventory, because rates have come up a little bit, the opportunity here is that houses are staying on a little longer, and I am experiencing more inventory in the areas I service. I'm seeing more and more come on. And I believe as we progress into the year and moving forward, that we may start normalizing. Right now, we're seeing a 30-day, I'm thinking Bristol County, 30-day market time, whereas 3 weeks ago, we were seeing 2 weeks tops days on market. So we're still in a seller's market. 6 months, under 6 months market time is a seller's market, and over 6 months market time is a buyer's market. And we're only seeing it's a 30-day market time, which I think before 2020, 30 days was like, oh wow, that's great. It was like, yeah. So the bidding wars aren't as predominant. We're not open houses. I'm not seeing 50 people through a door. I might see 10 now instead of 50. And so it's not this frenzy. I'm using general terms. It's not this frenzy overall what it was like last year and maybe earlier this year. So
I have a question for you, Lori. With people that are struggling with inventory, what tends to be the thing that gets in their way? Is it that the house is too small, it doesn't fit their needs, or just that they can't find it?
Yeah, a lot. There's just not, there's it's price. It really, I would say, for most people that struggle with inventory, it's finding the right price point. Anything in Bristol County that's under 400,000. I'm using general. Parts of New Bedford, you can get a decent house maybe for 350, 360 forward, but in the Taunton, Berkeley, Attleboro's, it's almost non-existent and needs work. So maybe there's a rehab loan for them or something like that, you know.
I'm glad you brought that up. We do a lot of renovation financing. I would say if any of those buyers that you're working with need renovation financing, check with their lender if their lender does renovation financing. If not, that's something that that we do quite a bit of, and you know, it can be that help to turn it into the almost perfect house for them. If it needs work, I think sometimes people don't understand how renovation financing can work, Lori, and that it's you know, it's a way to make the house the way that they want it. The other thing, and it's interesting, you had said like, hey, if someone's looking in Bristol County versus in different towns, it's maybe expanding your search. And I know sometimes, you know, we all want what we want and we want it now, but sometimes we have to make those little concessions of, all right, maybe you take a little longer commute to work, or maybe you get to know a new city and town, or maybe you can work remote, and you can have a home instead of, you know, giving your landlord $1,500 or $2,000 a month in rent.
Correct. Now, if I were to purchase, let's pretend I'm a first-time home buyer and I'm renting, and if I were to purchase a home for $400,000, what would be, and I'm going to put you on the spot, you can give me a range, what would be the approximate loan payment on something like that? With
Goodness, I don't know, but I'll tell you. I mean, I'll just do, like, say for instance, if the buyer did 3% down payment. So I'm just using my my calculator. And this is what's known as principal and interest. So it's not not taking into account any taxes or insurance. And disclaimer, I'm just using a general number right now. And I'll do 30 years, as most people end up going 30 years on their loans. With no taxes, no insurance, it's about a $2,200 a month mortgage payment. Additions on the payment. So the payment's broken into a few things if you're a first-time home buyer. You got principal and interest, which sounds as literal as it is. You're paying a little bit of principal, pay a lot of interest in the beginning. You got your house insurance. Then you've got your property taxes. And then the loan, most loans, when you're not putting down a 20% down payment, are going to have PMI or private mortgage insurance. Right. Except, here's a little asterisk, Mass Housing has their Workforce Advantage program. That program primarily geared towards the lower earners. Right. And it goes by household size, and it also goes by total household income. It's one of the few programs with Mass Housing that looks at the total household income of all the adult members living in the house. But that loan can give you a 10% down payment that can be used towards down payment and closing costs. And that loan does not have PMI. It's a really good product. It's very conservative. So when you're getting a mortgage, and sometimes it can be overwhelming for a client, a lot of it is math. And you can do this yourself if you're a consumer watching this video. So a healthy number is that your mortgage payment is 28% of your gross income or less. Sometimes it can be more. A healthy number on what's known as a total debt to income ratio. That's when we take into account all your bills, all with an asterisk. We're not looking at utilities, your gym membership, your cell phone, but we are looking at student loan payments, car loans, credit cards. So we take those monthly bills, we take your new mortgage payment, and we divide them by your gross income, what you wish you could take home. So the debt to income ratio, a healthy number, is 43% or less for all of your bills. Now, there are some loan programs where you can go above that. Those are the loan programs where if I'm talking to a client, Lori, I'm going to say to them, hey, I'm nervous about you. We're at 55% of your gross income. Where's the other income here? And those are times where it's, you know, I'm going to make a case-by-case decision on, am I pushing, there are loans, there's what's known as an FHA loan, not to get too much into the weeds, which is the Federal Housing Authority. It's a great program. It allows you to be a little more liberal in the debt to income ratio. You got to do it where you're doing it to make sense. So there are situations where somebody just recently started a business, so they've
Mhm.
got a side hustle, can't claim it yet. Okay,
Right.
and you look at what they're getting, or you've got a second marriage or second relationship, and the new partner or new spouse really has issues, credit issues, but you know that, hey, they're in the picture, they're there, they're bringing income to the table. Or the person's in a business that's maybe like gratuity based, like a server and doesn't claim.
Sure, sure.
So that's when, pushing those boundaries are okay. So, a good lender is going to talk to you about this stuff and not just
Mhm.
tell you like, hey, this is how you're going to do it and that's it. They're going to, have a conversation with you. You want to make certain that you're going through an education process
Mhm.
when you're looking at getting a home and when you're looking at selling a home.
Mhm.
Sometimes people think like, oh, because I own a home, I'll be fine, I'll be okay. I implore all your sellers to make certain that the second you talk to them about listing, that they're connecting with a lender to make certain that everything's okay. You wouldn't imagine the amount of people that I've spoken to that appear that everything's perfect, but yet, once you start peeling the layers, you realize like, oh,
Right.
okay, you know what, we've got to look at X program because of X. And if they have time to work on things, it's a lot better than when you're scrambling.
Does the Mass Housing Grant Program, will they do any multifamily homes? Will they finance 1 to 4s or 1, 2? What will?
Yeah, yeah, as long as it's a residential property, yes. Yeah,
Okay, under 4 family.
correct, correct.
Right.
Mhm.
Okay, that's awesome. Well, Suzanne, this was very awesome. This was awesome to just really learn about the new programs, learn about what you do differently than most other mortgage lenders that I've dealt with. I love your hands-on approach. I love that you're about educating and really ensuring that. I love how you mentioned 28%. There aren't many lenders that would do that because I'm with you. That 28 to whatever, and sometimes you said a little higher, but then it becomes, I've worked with buyers before where they're wanting to pay more than what they can really afford. Like 50% of their income would go to house expense, I mean, house mortgage, insurance, taxes. And I look at them too and I go, wow, that's just, if something were to happen, you may lose your house, right?
Yeah, you got to make certain that,
Yeah.
um, I'm probably one of the most positive, negative people that you'll ever meet, right? I'm always
Yeah.
going to look at the bright side, but then there's that part of me that has
We
that
have to tell the
naysayer in
truth.
me.
You have to tell the truth.
Well,
And
you do,
yes.
and when you want something, and I've been told no so many times in my life, so I
Hmm.
get that when I tell someone no, and I'm like, listen, I'm not the only person. If you feel that you can go somewhere else and get this done, I totally wish you all the best. It's also because of mistakes that I've made in my past when, maybe I pushed boundaries and I shouldn't have made a big purchase, and I found myself like, like, oh my goodness, how am I going to be able to handle X and X and X? Now, I'm lucky. I'm like you. I'm in a commission-based industry. Okay, I'll just work harder. But some people don't have that ability. They're either salary
Right,
or they're
right.
hourly. And, as the economy changes and inflation is up, some companies might say like, hey, sorry, with company costs being up, we're going to cut overtime.
Oh, right,
So these are the things sometimes that people don't think about, and they
right,
just think of the house is beautiful. Like I want to help everyone get a home, but I want to help them do it responsibly.
right, right. That's awesome.
Yeah. Well,
Yeah,
I thank you a ton for this, Lori. It's been
yeah, me
such a
too.
delight. I look forward to doing more of these with you. I love how you want to educate clients and that you're such a plethora of knowledge for people. People are well served by you, Lori.
Thank you, Suzanne. And people are well served by you too.
Oh God,
We'll
thank
do this
you.
again sometime.
We shall.